Okay, guys. Uh, just wanted to do a real quick video on the OrderFlow footprint that I use by Valtos. I also use Polarity's reverse strength bands. You see those bands at the top and bottom of my chart. And also I use the Polarity Future Analytica Wave. And I'm just giving you guys an idea of how I use it. There's nothing etched in stone. So, don't come back to me saying, well, you said do it this way. No, I'm just giving you guys an idea of how I use it. With that being said, today was a very rocky day. Let me explain something to you guys real quick. I usually don't do videos on trading because I am at best a break-even trader at best, but I am learning this as I go along, and I've been in this for some years now, decades. But with the way the information is coming out, 25, 30 years ago, we didn't have order flow. We didn't have access to order flow and charts like this. We had like what, Metastock? You was lucky if you got Metastock, and then you had to get the end of day data from CSI or one of the other major data supply companies at the time. And this is the first thing I do. Let me show you my procedure is when I'm looking at trades here, just so you know how I go through the steps. This right here is a daily chart of the E-mini. The very first thing I look at when I wake up in the morning and I see what's going on, yesterday. Well, let's go back to yesterday. Let me draw a circle around this just so you guys can see exactly what's going on here. Let's start with yesterday, because yesterday, that small bar right there, that's an inside bar. I have learned the hard way. I cannot trade inside days. If the daily bar is inside, it's scratch for the day. I have a partner, and what did he say? He said something to the effect of, if you're going to trade inside days, it's the perfect day to definitely trade the edges. I think that's what he said. Black Chip, that's his name. If you guys want to get on to him, he's very good with trading bands and stuff. Black Chip, when he responds on this video, leave him a note and tell him to leave his email. Get him on board to leaving some trading videos. Very good with trading edges. But anyway, we talk to each other every day. And one thing I learned just from looking at inside days, when I have an inside day, and yesterday was an inside day, it is in I am inside of there's a guy has a Discord trading room. And people give ideas only about polarity, ATI, and footprint charts. Can't come with nothing else other than that. That's where we're at. We're dealing with order flow and polarity. But anyway, and you can look, is Alpine Trading or something like that. I want to say Alpine. Look up Alpine Trader on YouTube. He has a Discord room where we come in and we discuss, whether you're going long, short, and so forth. That's his thing. But I like going to his room just to look at the conversation and see what's going on. And one thing I noticed in the conversation yesterday, which was October 12th, an inside day, where people were having a very hard day. And I have noticed this 6 months, a year ago, that inside days is just not my kind of day. Okay? So a lot of times, the first thing I do when I look at a chart, if it's an inside day and I see that's where it's going to be the rest of the day, that equals no trades for me. All right? Let's put this chart back. That's on a daily chart. And of course, I'm also looking at where where I draw my channels, support and resistance, and notice it hit resistance today. Okay, so let's go to the footprint chart. These footprint charts, the things I'm talking about in footprint, they're just ideas in from how I'm looking at the market and so forth like that. This footprint chart is a Valtos footprint chart. And a lot of guys saying, well, what's the difference between a Valtos footprint chart and MZ or whatever other footprint charts you're looking at? Valtos footprint chart is a very good order flow footprint chart to look at because he's tagging everything from delta divergences to trap traders to imbalances. You name it, it's on his chart. And you don't have to be looking at all of those, but when you're looking at a combination of those signals, they give off some very good signals. Okay. Here's one trade I look at, and I take this trade because I like to use the bands as either the price is going to be extreme up against the red band or over the red band, or extreme down against the green band or below the green band for a buy. So when it gets above the red band, I am looking for a sale. When it gets below the green band, I am looking for a buy. Okay? Now, with that being said, let's walk through something that I saw this morning. And I didn't take the trade. And if I'm not mistaken, I think my partner jumped in this trade just as it was happening. His technique is a little different from mine, but we're both looking at order flow. This right here, you got resistance up here. Okay, so we know resistance up here is at this extreme. I'm gonna call this extreme band, the extreme sell band. Okay, we know resistance is up there. You have, oh, let me correct that. You have, make that red, 43 buyers here. Then the next time it makes a lower high, it goes down to 35 here. Okay, that's not enough for me to get in, but it's something some of you guys might want to look at when you're looking at different patterns for order flow. Then next time it comes back up, it doesn't quite get up there to that high. Not only do you get a single print, but it goes down to 1. So this number is descending, 43, 35, and then it goes down to 1. That's a trade. That's a get into trade. And I'm going to also explain how I look at these POCs a little bit also. But let's look at this. That's how I pay attention to numbers like that. As that number, as it comes up and makes lower highs, the numbers are also descending. So that's one clue that I use when I'm looking at, you have to pay attention to those numbers at the top right hand side of that bar for the buy side. For the sell side, I pay attention to those numbers at the bottom left hand side. Just something, one of the clues that I pay attention to. And this video is just really about clues, not about signals. This is just about clues that I use to decide if I'm going to get into a market or not. Okay. Let's look at something else. This is my first time going through this chart today, even though I've been looking at the charts all day today. So yes, that is clues I pay attention to. And that's whether you're on the buy side or whether you're on the sell side. Okay? Just because you get one bar, and I know a major report had came out or was coming out right around 9:30, 10 o'clock or something like that. I think a major report came out at 8:30. But just because you get one major bar, let's look at this for a second. Right here, I got an imbalance box. I got an imbalance box. I got trap traders. I don't shoot and hit that button right away. I want to see a little more than that. I want to see it. And a lot of times I like to, if I just get one, then I'll watch it come up, come down again. And a lot of times when it comes down again for that second try, whether it's this bar or whether it's this bar, you start to, it might give you a ratio. Here's a ratio, but the ratio might be on the buy side or something like that. I'm not saying this is a signal, but a lot of times when you wait for that pullback, it's going to start giving you other signals like ratios and trap traders. This is just one. This is just a trap trader. Okay. Let's look for some signals where you got the go signal, so to speak. Also, I am paying attention to the delta, the max delta, the min delta. I like to watch the cumulative delta, which if you look at the cumulative delta right now, this is basically saying we're in a down market. This was this morning, as of the 13th of October. Look at this cumulative delta. That also gives me some type of indication on how the market is doing. We're down for the day. Even though you might get a positive delta, pay attention to the cumulative delta because it might be telling you something else that you might not be paying attention to. So these are the numbers that I look at when I'm looking to pull off a trade, so to speak. Okay. And right now, I am totally a short trader. I am a short trader galore. I am afraid to take long trades right now. So any trades you see on the long side, I can talk about it, but there's 99% chance I would not have been in because I am not feeling comfortable about the markets at all, even though it ended up, we're up 872 points as of right now, and this is 347. The E-mini market is still open, so we're up quite a bit today. And that market was down, I want to say like 500, 400 and something, almost 500. The Dow was down almost 400, 500 points today. So that's quite a bit of turnaround. Did an 180 degree turnaround today. Here's another signal that the clues are there. Here are the clues. You got a delta ratio. You got price exhaustion. You have stop in volume. See the color of that POC? That's stop in volume. And I don't know if your footprint does this, but these are the benefits I see in using Mike Valtos' OrderFlow footprint chart. Okay? So you got stop in volume. Stop in volume right there. You got a ratio right here. You got a single print right there. Okay? That's a red flag for me. I say, okay, let's see what else comes out of that. Okay? And you're not going to get a bunch of arrows at the top. And I'm starting to learn you're not going to get a bunch of arrows at the top of your chart or at the bottom of your chart every time you want to go long or you want to go short. You have to learn how to train your eye to see this stuff manually. A lot of people want red light, green light system. This is not red light, green light. This is something that you have to study and you have to learn over time. That being said, Okay, the clues start right here at this pattern right here. And as I'm showing you this, I'm also learning stuff myself. But the clues start at the top of this pivot. The clues start at the top of this pivot right here. You got stop in action. You got ratio. Okay, so I'm going to say, what else is here? Okay, you got, and basically you start, this is the resistance area. That's for me, that's resistance. You're starting to see resistance here. And then you got 35. It comes back up here. You got 35 right here, but next time it comes back up here, almost to the same point, to almost the same price, you only got 17. You got half of the buyers here. So the buyers are dwindling down. They are disappearing. Okay? You got the buyers disappearing, and you got ratio right there. And basically, that's your resistance area right there. If you miss getting in there, taking a shot there, and my stop would have still been up here in this area. Okay? Now, the closer you can get into that pivot, the more better off you are, the less you have to worry about risking. So, with that being said, let's move along. If you missed that right there, if 17 and 35 wasn't enough for you with this right here, here's your second chance. You got a single print right here. You got a single print right there. Okay? Now, I'm gonna get a little advanced on you guys for a second here. There is an indicator out there in YouTube land. If you look it up, it's called TAS indicators, TAS. And they talk about volume. And they have certain signals that they use, and it's basically using the POCs. And the POCs, they give you different formation of the POCs, and they're using 3 POCs like you see here in this footprint. And they might say this is planking or whatever the case might be. And this is a perfect POC planking right here. You got 2 volume indicators up here at the top and volume right here at the bottom. Okay? That's, to me, I use that also. That's a sell signal to me. Now, if you get Mike Valtos' OrderFlow footprint, he talks about the same thing, except he doesn't use those terms. I learned those terms from watching a lot of Taz videos on YouTube. It's called Taz Video. Can't remember. Just look up Taz indicators on YouTube and you guys will find it. But that guy gets into the different formations you see with these POCs. That's this formation right here, that's a selling formation right here. Okay? That particular PC, these POCs right here has 3 POCs, and the 3 POCs are basically the POC with the most, the second POC with the second most, and the third POC with the third most volume. Watch those videos. Watch those videos. Very good, especially when it comes to discuss. And look at that TAS indicator as if you were looking at those 3 POCs, and you will definitely see the same formations pop up in these POCs that you see on the TAS indicators. Just thought I'd drop you a little note on that. That's a diamond. I'm dropping you nuggets. Okay. So this was a short trade here, and notice if you didn't get to go here, you got to go here, but you were able to scalp a few ticks out of that. Even if you'd have got in here at this and took it down to there, that's 6 points. That's a $300 move just from there to there. Okay? But in actuality, the move was right at this bar right here, or right at this bar right here, because you did get the planking on the POCs, and then you got the ratio, you got the stop and volume. All of that stuff is adding up. All of that stuff is adding up. Worst case scenario, you'd have took that move, you'd have took a little heat on the pullback, and then you'd have rode it down. I usually ride it down, try to get 4 or 5 points out of it, but that's just from that point, that's 9 1/4 points, and this is on one contract. So you can see, like I said, this is not a system. This is, OrderFlow gives you clues as to where you're going to buy the market or where you're going to sell the market. That's all it does. That's all it does. It's not a system. Okay? You can see it's chopping here. And look at these clues it's given, even though it's not giving you nothing definite. And like I say, I am not not in favor of going long the market right now. So this is, you can notice it's chopping back and forth. And, if it's chopping back and forth, if you don't see a trade, you know what the hard part is about trading? The hard part is, this is a range right here. I'm trying to draw this range here just so you guys see this range. The hard part about trading is discipline. The hard part about trading is sitting on your hands and waiting for a signal. You're not going to catch every trade. You're not going to catch every trade. And when you see these zeros in the bars right here, you wouldn't have caught that. That's fast market. That's fast market. So, yes, OrderFlow is about looking for clues. And also, let's go back here for a second. Let me see if we got any kind of clues here. Also, this bar right here, notice the delta is starting to go negative right here. Okay? So even though, and I call this, I always say dead man walking, when you get a delta divergence and you get a plus delta and the bar is a doji or negative or vice versa, I call that dead man walking. That's a sign that or red flag that you need to be paying attention to. Order flow is about paying attention to what's at hand and what's popping right then and there. Don't wait too long. You ain't got enough time to think about this. You got milliseconds to think. Do I want to get in this market according to what is happening? You're getting the clues, but the clues don't last too long, because by the time you finish circling and marking your clues, the market has moved 5 to 10 points. That's how fast this motherfucker, excuse my language, that's how fast this market is moving. Let's move on. Let's move on. Let's see. I'm quick to point out short trades much faster than long trades. Right here, we got trap trader. We have what you call a short tail. That little arrow that's pointing to the right is short tail. We have a trap trader. We have imbalances in this box. Okay. Now your ears should be, red flag should be going up. Your ears should be pointing straight up at this point. The next bar, you got imbalance. You got imbalance here. You have a single print there. Then comes the entry bar. Look at this. You have a ratio price exhaustion right here. You have a single print right there. You have imbalances right there. Now, something about this, all this volume at the bottom, you got a lot of people selling here at the bottom of this at the bottom of this bar right here, because you have the three POCs stacked right on top of each other at the bottom of the bar. Okay? This bar is a go. Your stop would be right here. That bar is telling you 1, 2, 3 red flags. Get in. You got 37 buyers here. I think that's 37 right there again. Yep, 37 there, 37 there. But that 37 is trapped. Then you got another 37 here. And then you got one here. That's a go. That's where your stop goes. And notice you are extreme. You are above the red polarity line, which this guy is giving away this indicator for free. If your ATI auto tool is not on, or you're not sure about what to go for the extremes with the polarity bands. Go for the extreme with the polarity bands. Also, look at your wave here. Your wave has gone negative. Okay? You went from plus 75 on the delta to minus 421, and that's a magenta color. It's closing on the low of on the min delta. You got another magenta here, and it's closing near the low. You have no buyers here at all. That's a sell signal. These are not signals. These are just red flags that you have to pay attention to. When the market's moving fast today, the market was very volatile today. I considered today a hard day in trading. I pulled off one trade today, and I trade micro. I pulled off one trade today and made a little bit of points, but you know, it is what it is. This was not the day. Very volatile day today. You would put in a short order and you would get stopped out in a matter of seconds. Okay? Very easy to walk through this stuff after it's all said and done. Haha. Anyway, let's look at the buy signal. Let's look at the buy signal down here. It's extreme. And like I told you guys, I'm not a buyer. But it is what it is. You got an imbalance box down here. You got a play right here. And then you got magenta right here also. Not magenta, that's Kion. You have a buy signal there. This is a fast market, but you can still point it out on the chart after the fact because it's going to do what it's going to do. You probably would not have caught this trade. Now, here's a pullback. At this point, here's a pullback with trap traders and a buy-in tail with a zone. Your stop could have went right here below that trap trader, because not only do you have a trap trader, you have ratios, you have imbalance, and then it came down to this point again right here. Beautiful, beautiful long trade. Like I said, I'm not into long trades, but you could have scalped, and I'm using 10 range bars on this, so you could have scalped at least 10 ticks out of that trade also. Back up to the extreme on the sell side. Let's see what else we're looking for here. Even though you got trap traders up here, look at this. You got there's no magenta. There's no delta's not. There's not enough sellers up here to say, let me get in and sell. There's enough buyers. There's enough buyers. Also, I wanted to point out, if this particular band, if this wave, if these two moving averages have not touched this band on the buy side or the sell side, this is the sell side because it's red, even though you're extended on this band right here, if you're not extended, if you still got some meat on the bone down here, that's a trade you might want to consider taking. Let's move on. Running up, running up, running up. We're running up. Dead man walking right there, no ratio or nothing. And you got ratios starting to pop up right here. I would be looking at this. This would make my eyebrows raise. Look at that. And balance box there. You got another ratio here. Let's see what it does. Let's see what it does. Boom. That's another scalp. That's another scalp. And your, of course, your stop would have been somewhere up in this area. I would rather trade manually than trade automatic. Because when you trade manually, you understand why you are getting in and out of the market. If you have something that's trading black box for you, you don't understand. You don't get it. I've been there, done that. You will not understand why it is going short or why it is going long. If you're going to buy a black box, understand why it's going long or going short. So if it goes down, I saw a lot of people complaining today about they were getting kicked out or something. They were having problems with the ATI or the ATI, the polarity thing. You have to know how to go into manual mode. This is manual mode because all I saw was complaints today. So I feel I must say something. Anyway, this is, even if you got in here, and I always use worst case scenario, I always use 2 ticks below of where that bar closed. That's a low of 4.5 points. You would have got 10, and like I say, I'm on a 10 tick range chart. You would have got 10 ticks. That's a real nice 10 tick scalp right there, plus a little more. If you got your ATM set up the correct way to trail or start locking in a certain amount of ticks after you hit your first target. That has a lot to do with it too. But getting your entry down is the key. Once you get your entry down, whether you're going long or going short, then you can play with the ATM. Once you get your entry down and you see what the average move is, then you can play with your ATM. That's when you start fine-tuning your ATM. Okay? Let's see what else is going on here. That was a very good sell trade there. Buy, I'll bring up a buy when it goes extreme enough down into the buy area and I see what's going on down there. But right now we're just walking through the sales of today. Here is a, even though it's not a sale, here is a something, here's a color. Pay attention to your colors on, if you're using Valtos Footprint, pay attention to the stop and volume colors also. Pay attention to the stop and volume colors also. Very important. That in combination with other things would be a red flag for me. The market did a 180-degree turn today and just started going up like crazy. Okay. Here we are, extreme again. Extreme again. 2 fingerprints is not enough for me to make a move. 2 fingerprints. I like to see ratios and trap traders in my combination of red flags when I'm looking for a buy or sell signal. Ratio. We got a tail zone there. We got trap traders. We got imbalances. That's 3 red flags in one right there. 3 red flags in one. Okay? Then you look at the next bar, even though you just got a single print there, you got magenta showing it's making a way there. It went from 484, and then the top of that pivot was just plus 20. Now it's minus 323. I pay attention to the differences between those numbers also. That's not a bad sell signal there. And look how much of a move you got out of that. Trading manual is not a bad thing. You guys who are trading automatic, the ATI, if you don't get it, go manual. It's not going to hurt you. And you know, the thing is, you will probably pull more points out of a trade, manual trading, than you would letting the ATI. Now the ATI, I run the ATI if I want to see the signals, but I am manually trading this, and it was well worth it to me. It's well worth it just to see the signals manually. And he's giving these bands away for free. Go get the bands. Go get the bands, download the bands, and you will see a difference when you start going extreme to upside and extreme to the downside. Here we are again. Here we are again. Ratio. You got 70 buyers here. Then it goes to 3. Then you got another ratio here. That's a scalp. And only 1 there. Not a bad trade. Not a bad trade. The entry probably would have been somewhere around in there, worst case scenario. Your stop goes right here. You would have got enough out of that before it turned around and went back up. You would have gotten quite a bit out of that. How many ticks is that? Let's look at that. Worst case scenario here, down to here, the low. That's 3.5 points. That's 14 ticks. 2 bars. 14 ticks. Even in my ATM strategy, once I get 8 to 10 ticks in the money, I immediately go to break even, because another bus will come along. If you break even on a trade, then you come again. But at least it's a break even for me. I look at it as a free trade. Cover your commissions, see what it's going to do. And I have a 10 tick target on my first contract. So once I hit the first contract of 10 ticks, the second tick immediately goes to in my ATM strategy. It immediately goes to break even plus 2 ticks, and then it starts trailing as the market starts to fall or as the market starts to rise. These are just ideas you use with OrderFlow. This is how I use OrderFlow. I'm not telling nobody else how to use OrderFlow. These are just ideas on how I use OrderFlow. And really, there is nobody giving ideas on how to use an actual footprint chart live. I can't do it because I need to be concentrating on my trades, and also it's the pressure there of just trying to make money when you got people watching you. It's too much pressure. I don't need that pressure. I don't need the pressure. I'd rather sit back and make the money, then I'll talk about it. If I have a losing day, I got a losing day. If I got a winning day, I got a winning day. But you don't want that pressure in trying to run a YouTube channel and pull winning trades at the same time. Ask Panda Bear. Very good trader, by the way. But I notice when he's under pressure, he doesn't do very well under pressure. And that's for anybody. Not saying that it's only him. A lot of people cannot do well under pressure. I don't do well under that kind of pressure. So I understand why people don't want to be trading live or recording, be on YouTube live or whatever channel they might be running while they're trading. Too much pressure. Too much pressure. Look at this right here. And I'm just walking through this slowly as I'm looking at this. Look at this right here. You got trap trader. You have a tails. Look at the numbers here also. 13 versus 107. But there's a big button here. Guess what I don't see? You know what I don't see? I don't see no magenta colors down here following that. So that's telling me buyers are still in control somewhat. Something to think about. Something to think about. You did go down to minus 130 here, but it was at minus 329. Something to think about. Pay attention to your numbers when you're getting in these trades. Your numbers are going to tell you if these bars are going to continue or not. Nothing up here at this pivot. Look at that magenta though. You got minus 494. Then it pulls back, doesn't pull back much, and then boom, there's your signals all again right here. Even though I am making this look easy, it is not. That's your stop right there. So even if you'd have got in, once you'd have got in this bar, actually your stop wouldn't have been up here. Once you'd have got in this bar, my stop would have been right here. Right in that area. Right here above this, right here above that ratio. Look what kind of fall off you got. You got an imbalance box, you got a ratio, you got exhaustion, you got what is this gold? Oh, that's the imbalance box, that little gold arrow right there. Yeah, those arrows start stacking up, but just because those arrows stack up doesn't necessarily mean that's a go. Pay attention. You got magenta, you got your delta at a minus 170, closing one tick away from the min delta of 171. You got a down bar here, and it just starts falling from here. A lot of times, your clues are going to be over 2 or 3 bars. Right here, I am starting to see with the way this new OrderFlow 6.0 is, I'm starting to see a lot of clues are happening in 1 bar. Just gotta have the balls to take them, take the trade. And you got notice your wave is going negative down here. Look at the buy side here. Look at the buy side here. It's 1021. You got imbalance here. You got stop in volume right here, right around 46 3/4. You got another imbalance box to the upside. It's almost like me and my partner, we joke around a lot, but this is almost like a triple bottom, whatever you want to call it, triple bottom, almost to the tick, triple bottom plus or minus a couple ticks. Right there, the low is 46 1/4. Yep. Then it comes back down there again at 47. And both of these bars, and then you got an imbalance to the upside right here. Could have scalped a little bit out of there. Like I said, I'm not a fan of long trades right now. Not a fan of long trades right now. This right here, it's not extreme to me. It's not above the red. As you can see, it's not above the red band. So I would have been, or not would have been, I would have not taken a trade. I wait for extremes. I definitely wait for extremes. There are exceptions to the rule. I'm not seeing none yet that's making me say, you know what, get in here. You got sell signals here, and one thing that Black Chip does is he runs a 21 period moving average. So you can run a 21 period moving average between these two bands. If you run a 21 period, most likely the 21 period moving average is right here at this sale. He takes a lot of those sales. I don't have for some reason I took the 21 period moving average off because I like the extreme trades. But an idea for you is to put that 21 period moving average between those two bands, and a lot of times you'll see those sales in these buys come right in this area, and I guarantee that 21 period moving average is right there in that area. You got a ratio there, you got a stop and volume there. If you missed that, if you didn't scalp that, you got a turnaround here, you got a turnaround here, but if you catch these turnarounds, your stop still has to be up here. That's a pretty big stop. That's a 4 or 5 point stop. Pretty big stop. And it falls out of bed. But I just wanted to show you guys, that's how I'm looking at clues for getting into the market. Now look at this real quick. Just for Pete's sake, this is buy. You're below the buy band, so you already know the market is oversold like crazy. Your wave is crossing to the upside. If you're looking for buy, you're really not paying attention to the sell signals here. You only want to pay attention to the buy signals. You got an imbalance here. You got 123 here, then it goes to 16. So the sellers are definitely thinning out. You got 123 here, you got 16 there. You still have, you got a cyan here. So that color is there. You got a magenta here. That's not a go yet. It's still, I call it quarter in the range. So do not hesitate in drawing your ranges on the chart. If you catch, and look, if you catch a breakout, when you catch the breakout, the delta's gone green, and notice it turns to the cyan as soon as you get the go signal. You got imbalance box here, you got an exhaustion here, you got a ratio here. Look at all those imbalance boxes. It's gone. It's gone. It's just, you could, and the more and more you sit and watch and walk yourself through these trades, then you will understand what you're looking for. You just don't move on an imbalance or one trade. You have to have several clues that's telling you, hey, this is a go. Look at that. It turned cyan right there. Boom. It gave you imbalance. Even if you'd have got in right here, you probably would have been able to scalp a little bit out. You would have had to tolerate this pullback right here, which is not bad considering you got up here somewhere. You have to tolerate that pullback, and then boom, you would have hit your target by the time you hit that pivot up there. Very, very good long trade. So that's what's happening here on the footprint order flow chart with the polarity bands. Let's go see what's happening the current with the polarity bands, and that's how I look for my clues during the day. Yep, got quite a few things going on here. Quite a few things going on here. Let me see something for a second here. Look at the buy, because I don't know what time the market turned around. But every time this market turned around, you were getting buy signals like crazy. Got a market weakness down here to buy. You're looking at support right here. You got an imbalance here. You got an imbalance there, and you got a ratio there. And this is 236. Beautiful buy signals. Just something for you guys to be aware of when you're trading order flow. Just something for you guys to be aware of when you're trading order flow. Got a delta divergence here. Got a ratio here. Oh, you definitely could have scalped something out of that. Even if you'd have got in right here and scalped it down to the bottom, that's at least 10 ticks. Beautiful, beautiful. Overextended. Pay attention to your overextension. The buy, if there's no meat on the bone, like this trade right here, don't take it. Even though this is a good trade right here, this is one something. It almost looks like the last trade I was looking at. But even though there's a trade right here, look how overbought it is. The market is overbought right now. So you might want to be just patient enough for it to wait to get back down to the extreme. When it gets back down to extreme, then you start looking. You start looking for your red flags. Red flag, red flag, red flag. You would have scalped something out of that. You would definitely have scalped something out of that. You would have at least gotten your 10 ticks out of that. You'd have started looking down here because there's a ratio right there. So you took a little pullback heat on that, but you would have eventually hit your target up there by the time it got up there to the top of that band. And your targets can be set at the opposite end. If you get in down here at the bottom of the band and you do get in and you decide to ride it up before you get out, you can put your targets right on those bands, and vice versa to the downside. That is it. That is all I got to give. Practice, practice, practice. Practice, practice makes perfect. See you guys later.